Let's keep going.
The government's paying bills. They're not building ski resorts in Austria or condos on the moon.
Right.
So where are the bills coming from? That's the question.
Well, a lot of it's coming from the military-industrial complex. I know that.
Oh, yeah.
Yes. So this lending facilitates ongoing government spending on various programs without the need to raise taxes.
Yeah.
So that's that whole thing of. So I had this woman on our show, Stephanie Kelton, and she wrote a book about.
He had Stephanie Kelton on, and then he's going to this guy.
Why now I'm blanking on the term that she uses about modern monetary policy theory. That's
MMT.
it. MMT. That's it. And she explained that, when they pass a law to go pay for something, let's say, hey, we want to send $150 billion to Ukraine. They don't go raise taxes to pay for that. They just print it.
Yeah.
And they just send it.
Yeah.
And and she's saying, so I don't even know why they collect taxes anymore if taxes are completely uncoupled from what they're spending.
Jimmy gets it.
Yeah.
He just needs someone to tell him that he's right.
Right. So what we've said before, the only reason to raise taxes is to give some value to that money, to create demand for that money, not because the government needs it. It's just to give the money value.
Or in the extreme case, if there was too much money that was put out, that some of it needed to get pulled back because it was too inflationary from how much they created. That is also a possibility.
Yeah, taxes are a drain on that new net money, and
right, and
everyone, it's the most universally required thing in the economy. People have to pay their taxes. Not everyone, but a lot of institutions, a lot of businesses need to pay their taxes. So that's where the money flow ultimately flows back to the government that spent it into existence at first. And that's what gives the money value. So that's how we should look at taxes. Taxes are needed to give the money value, not to raise money to then go on and spend that money that was taxed.
Which Jimmy...
this applies to the federal government.
Tell him that. Now he's got this other person on.
This applies to the federal government, to be clear. Now, state and local governments, they do need to raise taxes. They are users, not issuers of the currency.
So that's what this says. The lending facilitates government spending on programs without raising taxes to pay for it.
Yeah.
So, however, the reality is built on a precarious foundation. The dollars created out of thin air since 2008 have averted a depression, but at what cost? What is that cost?
Why are the dollars created since 2008 different from the dollars created before 2008?
Destruction of the currency.
You don't have to answer that.
So sometimes how I explain to my retirees, it's like you have financial oxygen on your back, like a tank of financial oxygen you sip off of, and it allows you to go wherever you want. You bring that with you, right? You go on a cruise ship, you go visit the kids, fishing in Alaska, pay your bills. And so what if that oxygen tank were to run out of air?
Mm-hmm.
What are you doing next? You're a greeter at Walmart? Not to be, just to say that most people don't want to be standing when they're older all day long,
right?
Or working at all, right? They did that work. They saved that money. Others seem to be willing to put that saved money at risk. So the ultimate threat is that the currency is destroyed. And so therefore the values within that currency, it would make sense to me, would disappear with it. And the one calculation I can give to just help people visualize what that might be is that, if the dollar's worth 100 cents and a home's worth 20 grand, and today a home's worth 440 grand and the dollar's worth 3 cents, where was the change agent? We just destroyed the dollar, flooded the world with money. It ended up in real estate. And now that same $20,000 house is $440,000 today. Because we did.
So, I understand his point about you can't buy as much with the dollar as you could yesterday, particularly in the housing market. But that's not, A, that's not destroying the dollar. And B, that's not necessarily because more money was printed. Right? As confusing as you were, or not confusing, but as complicated as you were talking about with the interest rate, like, okay, here's interest rates could raise. Here's the myriad of factors that could cause prices to go up or cause prices to go down. Like, the value of real estate has a myriad of factors.
Real estate is obviously is a function of population, and new home construction, and that is one big thing where, I mean, I don't know the rest of the world, but the U.S. is lagging behind on home building. They need about 2 million homes per year to just be
Break
back
even.
to. I don't know. I think Mike Norman, he showed some numbers, but I think back in the '60s or '70s or whatever, there was like 2 million a year home construction, and the interest rates were actually pretty high also at the time.
Right.
So we've been below that number for a while. So we need to be above 2 million. It needs to be, and that could be other causes, right? There's all kinds of stupid policies that make it harder and harder to build new homes, build new
Well, and then don't
condos.
forget there's like I don't know how big of a factor this is, but like, you know, the Chinese system is on the verge of collapse. And it's been for decades that people with any money in China are like frantically trying to figure out some other place to put it to protect their
Yeah,
money, and they'll come to another country and just throw it on real estate, and they won't argue about the price.
yeah,
They just like just stick this money somewhere where our currency isn't going to get destroyed,
yeah.
right?
Uh,
And
n-
then
n-
go ahead.
well, the so there's a lot of factors. Okay, now more money in the system is also one factor, of course. I think. I
Right.
mean, there is constantly more money added to the system, um, but the so that's always the case. So we can jump up and down and complain about that until the cows come home, but that's just a fact of the capitalist economy. There's constantly has to be profitability. Businesses have to um, increase their profits over time, and the worker productivity over time rises. More profits are made. Uh, but in order for investment spending to continue, there needs to be continual profitability in the corporate sector, and vice versa. In order for there to be continued profitability, there needs to be more investment spending. We ran through the Kalecki equation a while ago, and basically there has to be deficit spending, investment spending, and export surpluses don't have to be if the other two are present, and consumption out of capital also by the capitalists. These are all factors that add to aggregate profitability. And so yeah, the system is generally set up to grow and to grow the money supply. That's a constant, basically. That doesn't
Right.
help us make better decisions with our money. To complain
What
about that, and also to
and
reduce the money supply would not help either. It wouldn't solve fundamental problems. It would actually cause a recession, depression. You may get a fascist or a super communist government in power that nationalizes everything. Um, the money supply by itself is not a very helpful figure to focus on to
it's
improve
not.
the
And then I mean,
future.
with the real estate here, we could sit here and think of 37 different things that contribute to the price of real estate. And like you said, yeah, okay, maybe money supply is part of that, but to just
Yeah,
point at the money supply and say that's the reason that the real
right,
estate got more expensive is it's just not accurate.
right, right. Because it's always the case. And then also, so there's and another factor is that people have the ability to protect themselves against inflation. People on the individual level have the ability to invest in short-term interest-paying instruments, long-term interest-paying instruments, stocks, etc. That's the reason why we promote doing these things, so that you are protected from the effects of inflation in the long term. Real estate also being part of those things. Yeah. So these are these prices increase over time. There's more money in the system over time. How do you deal with it? What do you do? Obviously, is the important question. And also,
Yes.
so by the way, interest paid on savings accounts. It sounds ridiculous to most people because they're used to such low interest rates, but now they're up to almost 5%, and inflation has now come down to below 5% already. So over time, even just the interest on savings account gives you some sort of compensation for inflationary loss. I'm not saying it's perfect, not saying it's always spot on. It maybe have been less over the past decades. Now it's actually higher than the inflation. So this always happens. I'm not saying rely on savings only, but just making the point that, yeah, as the prices of these assets go up, we have a new comment from Andrew. As the price of these assets go up, you have ways to grow alongside those price increases. It's not like you staying at the same level and all the other prices keep going up. Now, if you make bad decisions, then that's what's going to happen to you financially, yes, but it doesn't have to be this way. Hi,
Let's keep
Andrew.
going. Yeah,
Andrew,
thanks, Andrew. We appreciate
I love your
your
content.
comment.
Always thanks, Mike. Well, thank you. That's why we do it.
Didn't
Right.
there's not a billion people that live here now.
Right.
We
And
only have 40% more people here than when we cut free of the gold standard.
so it's the exact same wood, brick, and mortar,
Yeah.
but now it's just worth. So that means you're saying that a big part of that is the devaluation of the dollar.
Yeah, destruction of it. Destruction of its buying power. There's two measurements on it. There's how strong is the currency against the euro or the yen or the pound, and then there's the buying power of a currency. The buying power, the dollar again has no value unless it's backed by something of value. Back it by.
It's backed by the value of the fact that it's demanded in taxes.
Yeah, so
Any
just
other currency ever.
one thing to add here, right? So because they're excuse me, they're talking about real estate, and it may be true that there's tons and tons of policies passed by Congress that are causing the price of real estate to go up because there's so much focus on encouraging home ownership and home lending. And then there was the Community Reinvestment Act that caused a lot of the 2008 excesses. So I think that there is maybe some legislative reasons as to why real estate is just going up so disproportionately when compared to other prices.
Well,
Once again,
think
that's
about what Richard Werner said about this.
yeah, yeah,
It's this idea that, okay, should lending, which is money creation from the banking system, be focused on purchasing assets, or should it be focused on investing into businesses that produce goods and services and hire people? His point is that if you do the latter, it's not going to be inflationary because you're increasing the goods and services while you're increasing the money supply. But if you focus on the former, which could be houses, it could be boats, it could be cars, it could be stocks, it could be anything, is you're increasing the money supply to bid up the. I mean, I understand that the amount of houses are going up every year, but like you said, it's not enough. You're bidding up a limited number of assets. And so, like, when it comes to buying houses, this is just occurring to me as we were talking. It's not like, okay, everybody's got a certain amount of money in our pockets, and we got to go pay, who can pay the most for this house depending on how much money they have in their pockets. No, I mean, some people have that much money they can do that, but for most home buyers, you go to the bank, and it's whatever the bank's willing to lend you, and B, can you afford the payment?
Yep.
So, I mean, this is what happened in 2008, right? When all these banks were doing these liar loans, like you could just say stated income and they gave you the loan. That increased the money creation to go toward bidding up assets. And it had nothing to do with economics. It had everything to do with regulation.
yeah,
So
for sure. There's a lot
little
of
regulation tweaks have huge impacts on how these prices fly around and how the money's created.
There's a lot of obsession over promoting homeownership, and I mean, I have nothing against promoting homeownership, but then at the same time, it may have now turned into a situation where it's become hard for a lot of people to be able to afford a home, to have the income, to be able to get a loan to afford a home. One more thing I wanted to mention on this is that because it is really, the degree to which real estate and rent has gone up compared to income and other things is really kind of
unreal.
ridiculous, right? So
Yeah.
there has to be some issues in terms of supply and demand that are unresolved here, and part of it maybe is too much money is being just pushed into asset buying. For example, the same site that we just looked at earlier, Discipline Funds, he declared a winner, I guess, in the year 2023 or whatever. He said, who was the big inflation winner? Which investment asset was the biggest inflation winner since 2020? And it was not gold, by the way. Um, he said it was buying real estate uh, using a loan. That was the biggest inflation winner because when you get a loan, you're betting that interest rates will go up after you bought the loan. And sorry, when you get a loan, not buy, when you receive a
Unless you
loan,
get an adjustable rate mortgage or adjustable rate
yeah,
loan, in which case you're betting
which
that they go down.
which is rare. But yeah, if you get a fixed rate loan, you're betting that the rates will go up from here. I mean, they may go down, and you can refi it, but generally you're betting the rates will go up, and you lock in a good rate. And when you buy a real estate object, you bet that the price you're betting on the price of that real estate object going up. So when you buy a house, when you bought a house in 2020 on credit, and you got on a mortgage, you won in both these compartments, right? You locked in a low interest rate, and you bought an appreciating asset, and you're now sitting
Double win.
with an
Yeah.
asset, and you're paying a very low. Like I bought my um, real estate in 2020. Sorry, 2019 actually, and then I refied. I think shortly thereafter. So I end up paying a rate of 2.87% on an asset that has appreciated 80% or so since then. So that's why a lot of people are sitting, a lot of real estate investors are sitting pretty good. So, have a very low interest mortgage, asset has appreciated massively. But for those who don't have those assets right now, it just looks ridiculous. Obviously, I can understand that.
Right. Either you got in the boat when the boat left, or you're stuck on shore, and you're screwed. Right.
Yeah, and we need more home building for that. I think there needs to be much more home building, and that
And
comes with don't have stupid people do regulations in your city of how tall condo buildings are allowed to be built. Uh, don't do a whole bunch of environmental regulations to cripple expansions. These are all factors that play into this. But I mean, you can get some good real estate out in the country still. You can get some good real estate somewhere in Idaho, and I think Montana's where everyone's going to. But you can look around. It's just like there's the cities skew these stats quite a bit.